We're back, baby. Welcome to another edition of Riley Rumblings. I'm out here in front of my new office at the corner of Palm Beach Ave and the Gold Coast Highway. It's an absolute dream. And guess what? It's getting taken away from me. The Gold Coast Council has decided to approve an 18-level high-rise and demoing all these local businesses like myself and Costa Taco and a couple other screamers. So let's dive into it. Patient zero of these 18-level skyscrapers was the Collective in Palm Beach. They called it the middle finger to the sky, and it absolutely got the whole community up in arms. There were over 1,900 objections, and the council listened. It was denied. Then a judge swooped in and overturned the denial for something that is twice the size as what's permitted under the city plan. This has opened the floodgates. This 50% uplift rule in Palm Beach has certainly opened the floodgates. Not only with my office, but Floors Sean 6 has put in an amendment to go from 12 to 18 floors, which frankly is the new reality in Palm Beach. Welcome to 18-floor high-rises. The next thing that's been weighing on my mind is spending habits. With inflation and all the rhetoric around it, who's paying what age demographics? Let's figure it out. That's some damn good coffee. You gotta check out Palm Beach Loves Dogs. Combank's cost of living report had some very interesting statistics showing that young Australians from 18 to 39 are getting hit hardest by this inflation crisis, and that they've actually been quite frugal and reduced their spending by 2%. While older Australians from 60 to 69 have actually increased their spending by 4% over the last 12 months, and those over 70 have increased their spending by over 8%. Here's why. CoreLogic has estimated that Australian residential property accounts for $11 trillion of wealth in this country. That's 56% of all household wealth. And guess what? Most of it is from older Australians that own their homes outright, so they don't have high rents, high interest rates, and all of that. But how does that affect the property market and who's buying? A question I get asked all the time is that how so many Australians are doing it tough and have had to give out their coffees out. How are people affording these astronomical prices of real estate? And what I found out is it's downsizers and the bank of mom and dad that are buoying the entire market. So in 2025, if you're looking for a hot buyer, look at that buyer that sold their multi-generation family home and are cashed up, ready to splurge. One thing that could massively help in affordability of housing is building more homes. And guess who agrees? The Australian government. And they have an ambitious plan to build 1.2 million new homes by 2029. Let's see if it's possible. And well, we're not off to a great start. It seems ambitious because we've only had 160,000 approvals over the last 12 months when we needed 240,000 to stay on pace. And this is due to a multitude of factors. The biggest factor is a lack of skilled trades. With Housing Skills Australia estimating we're gonna need 500,000 new tradesmen to even have a chance at reaching this target. That, combined with the fact that 3,000 building companies have gone into insolvency over the last couple of years, makes this ambitious target by the government very, well, let's just say it, impossible. Even though I've been living on the Gold Coast for over 12 years, I think it's my obnoxious American accent that makes me the involuntary spokesperson for Donald Trump and American politics. I didn't sign up for it, but it's the only thing I'm asked. And I'll tell you this, I'll tell you how it affects Australian property. Let's dive into it. Well, if you listen to financial markets, you're not gonna like the Macca's loving big fella, because they've changed their predictions for interest rate cuts to be in February and moved that to May. And it's because of Trump's policy plans of higher tariffs and lower taxes, which will just boom inflation. You may be thinking how a reality star turned president could affect Aussies' pockets. Well, KPMG thinks it will have a major impact, saying his tariff plans, especially those on Chinese goods, will increase inflation by 1% and lower Australian GDP by 1.5%. Not a good combination if you're hoping for an interest rate cut early next year. But hey, the financial markets have been wrong a million times, so I guess we'll have to wait and see. Thanks for tuning in. I hope you like these videos. Make sure to leave a comment, roast me for my silly walks or silliness coming out of my mouth. Everything's fair game. Roast me in the comments below and let me know what video I should do next. And if you do like it, hit that subscribe button or follow. It really helps me out.